Once again, this is Gam from FX Gam with my weekly forex video analysis. So I've got some requests which they want me to cover it in a slower pace. So for this week, I'll be covering just 3 pairs, but in depth, so that you guys can understand what's going through my mind at every stage of my analysis, and hopefully you guys will benefit from what I share here. I had a great week anyway. So starting for everybody's favorite, the euro dollar. Okay, that's what I always do. Start from the H4 chart. I'll start plotting my support and resistance. Okay, this is the ceiling, this is the floor. We are somewhere near the ceiling, so there's more room for downside instead of upside, but we cannot argue that the fact that euro might actually challenge this zone around 1.35. so I have this. Okay, and then I will go on to the hourly time frame and look for patterns. So I'll plot the more immediate support and resistance. So euro is now at the resistance. We have one top, two top, but the trend remains bullish as long as slanting trend lines has not yet been broken. So coming to next week, okay, I always like to point out two sides of the picture. If we get a rebound up to this high here and a drop back below this trend line, to me euro is a very clear shot. But personally, I will not jump when the price just breaks this trend line, because my stops will have to be about 100 pips away. Now that I'm doing bigger positions, it's a little bit too much for me to bear. So if this really happens, this is for the bearish side, and price breaks this slanting trend line, in preferably at least in the hourly chart, and it retests this zone here, which was a previous support, this might eventually turn into resistance. So any bounce back to this zone, to me, is a very clear shot, with my stops just maybe 50 pips above. Alright, or you can even do it all the way up here, maybe a 75 pips of risk to potentially go for a big right, and potentially about 200 pips right down to the March low. Now we are in April. So yeah, this is the bearish side of the euro, which I will be actively monitoring. Okay, I'll clear everything once again. And what if price is very bullish coming to Monday? What if? We have a lot of what ifs. So personally on Monday I seldom trade, but if, okay, this is the resistance zone that I pointed out. So if price really clears above, just breaks above like this, I will not jump for any long, because the stops are too high in my opinion. So the same thing is gonna happen. I wanted to go up and come down, resistance, potentially turn into support, and this is the zone where I am very interested to go long, with my targets right at the month high, which can potentially be 100 pips right up. Okay, so this is my game plan for euro. Okay, secondly, this is a very interesting pair sterling, which caused me a lot of emotional turmoil on Friday. Why did I say so? Alright, I tweeted it out that I was bearish on the sterling because it is at this very strong resistance zone around 1.6. So what happened next was price keep on hovering around this 1.6 zone. Okay, support and resistance, we are right at the top here. So does this qualify as a breakup? To me, not really. Have to see what happens on Monday. But this was what I was doing. This zone here, I went for a short. Okay, I saw this exhaustion candle now, so I went short here around 59.75.76, and I was around running 56 bits of loss. So just a little bit of experience sharing. In the past, when my position just rebound all the way like this, I will freak out and I will just close out my trade. But now, because I have lost many times, more than you can imagine, so I know how this whole thing can work, given a very rational mind. So what I did was, I had a short here. It went up. I was minus 50 pips with a position of about 5 mini. So I was on a floating loss of about 3 to 400 bucks, which is quite a lot, about 1% of my account. So what happened was I saw this spike up, down, and spike one more time. So to me, this is a zone which can't be cleared. So instead of cutting loss here, I did another short around 1.6030 with my stops just above this spike. So I was very lucky. About 11:30 p.m. on Friday, price closed all the way down to around 64, but I was out around 80. So instead of a loss of about 300 over bucks or maybe 70 pips, my past experience told me that, they taught me that it's actually a good way to short the market when there's a lot of spikes up at a very strong resistance. So I turned in a nice little profit of about 200 bucks before I went to sleep. So this is what happened. Coming to next week, I'm still interested to go short for sterling dollar, because I do not buy this breakup here. The candle is not very convincing in my opinion. So personally, my bias is short, but I always play two sides of the game. So how am I gonna play the bear side of this trade? Okay, we see this down and I pull back up. So always, I love it. I like to find those head and shoulders pattern, which can allow me to short with a very low risk. So personally, if price retraces up to maybe now it's a good price, 1.6008. The best will be 1.6020. So if price comes up all the way here, I will do a short with my stops about 25 to 30 pips, and I will target maybe here the previous resistance, potentially now turn into a support. I draw a line a lot clearer. So okay, this is it. If you are bearish on a pound dollar SIM, you'll be risking 25 pips to potentially ride all the way down at least about 70 pips, and the home run to me is about 100 pips. So this is the best side of the story. If you're judging from the daily candle, you believe that this is a very nice break up. So I'll clear everything once again. So if you believe it's a very nice breakout and you are bullish, okay, nothing really special here. One way is, after the short down here, you can go long. We have a structure support somewhere around here. So it's a resistance, potentially turn into a support if you do the short. If price does not come down at all and it just breaks above, so I will draw in my lines. Alright, we are right there at the resistance. So price to me must break this structure highs, weak high. So I'll do it down. So if price goes all the way up, very nice, and retraces down, normally this retracement will be a 3-wave correction. So if price does this and it comes back down here, I would then be convinced that this might be a very safe shot with stop just below this zone here, maybe 30 to 40 pips, to fight for potentially with nothing above. So maybe this zone here, structure highs, maybe 1.6130 to 1.6170. This is the immediate target. When we trade retail forex, we are dealing with a lot of leverage. So what happens in the very big picture might not really affect us, because 0.1% movement is about 100 pips for most of the pair, and leverage up 50 to 100 times. There's a lot